Hello everybody, welcome to TraderMerlin, our second show. Still don't have our set all in order, but things will start to get better over the next couple of days. We've got some nice graphics packages coming in, and of course we've got our wonderful market just giving us all kinds of fireworks and enjoyment as well. Lots of things to talk about. Of course, I want to address right from the very beginning a topic that's getting a lot of questions being sent in to me, and that is what on earth is going on with OTA, Online Trading Academy? There's a lot going on, and while a lot of it may seem very bad at surface, there's also some good stuff going on. I would encourage you, if you are interested and want to know more about it, if you're an Online Trading Academy graduate, just go to, TJ actually had it up here a second ago, you go to tradingacademy.com/join the fight. There is a battle going on right now between, we'll say, Online Trading Academy and regulatory agencies, which I believe are completely overstepping their boundaries, but there's certain things that you can do to help out the process. That's all I'm going to say at this point because I'm not a lawyer and I'm going to stay out of that stuff. But what I can tell you is the show will continue, and now that I have nobody looking over my shoulder, I can pretty much do whatever the heck I'd like to do. So we mentioned yesterday that this show is, since it's its maiden voyage, starting off from scratch, I'm using a lot of the ideas we had from the previous versions of Power Trading Radio, but of course we can mold it, shape it, do whatever we like have two lovely ladies walk in the studio right now and join me in the live studio audience. Hi ladies, how you doing? See, the beauty is I can now bring showgirls in the studio with us. Maybe we'll get pom-poms and fancy outfits for them. To make this show yours, it's actually rather simple. The thought process is I know what I want to create as far as a perfect show for me, but that might not be what's perfect for you. If there are topics, discussions, things that you would like to see and things that you would like to have addressed on the show, then you can send that on in. Go to TraderMerlin@gmail.com. You can send in any comments, questions, suggestions, as many of you did last night. Thank you so much for doing that. And I will do my best to incorporate that into the show as I find the money to develop and grow it, because obviously there is no income stream for this program at this point, but we'll have to get there sometime. All right, let's go down the list. What do you want to start with? I guess we'll start off with our overall markets. Of course, today, the big shocker out of the FED, the Fed, was a 50 basis point intraday cut. Last time I saw that was back in the late 90s when Mr. Alan Greenspan did it, a surprise cut intraday by 50 basis points, and holy shnikes, it just rocked the markets to the upside. Today, they pretty much telegraphed that as a 100% rate cut on the 18th of March. So this was pretty shocking to see it happen intraday, and of course about a week and a half early. What did it do to the markets? Not much, really. It actually was not well received. You had 5 minutes of just glory as the market soared, and then all of a sudden it just spent the rest of the day giving it back, which tells you how nervous this market is. I'll start now with our top 7 markets. I'm going to do the 7 because they are noteworthy, but I'll glaze over some of the indexes so as not duplicate things for very long. The most noteworthy thing today, and I actually started yesterday's show with this one as well, and it continues to just, if my jaw could fall to the floor right now, it would. That's the 10-year. I mentioned this yesterday. We fell to 1.06. We ended at 1.08. That was down a huge percentage. What that means is that foreign money is chasing yield. They're finding anything that's going to pay them because international stuff's going to start going even further negative. Take a peek at the 10-year U.S. Treasury note futures that TJ is going to bring up here. This is on Clik. You see just a gigantic green candle showing up today. That basically is telling you there was a lot of interest in buying into this futures product. It was in a complete engulfing pattern of yesterday's trading. Not sure exactly where it's going to go, but what it did for the yield was very interesting. Go and show us the 10-year yield. There you go. We talked about this yesterday when we were down at this 1.08. It's even further down than this now. Let's refresh this because that's got to be an old chart. It's way further down than that. 1.8 was yesterday. Look where we are now. 1.01 is where it closed at today. We actually, at a brief moment of time, we're sub 1% on that 10-year. I'm dismayed. I just can't believe that it's that low. Of course, I guess if the trend is your friend until the bend at the end, and we look at this 5-year, well, there's no bend at the end here. It looks like we're going to continue to head lower. So this will be a very interesting topic going forward. We'll see if this will continue to go to maybe 0. Will we see it go under? I don't know. We'll see. It's going to be an interesting one to see how we go from here. All right. Let's go to our number 6. Number 6 on that's going to be the composite. Click up there for a second. These were all pretty negative. What's strange about this is how positive they looked during the day. They were up having a very nice move, and then all of a sudden gave it all back. You guys can see on these charts here. Big red candles out there for today's trading. So we had our 2-day pump. I actually thought we'd go a little higher than we did today. When we get to the S&P, I'll update you on what I did with my positions there. NASDAQ composite, which I'm going to put in 6th place, was down 2.99%. It's the intraday chart that really makes you go, wow. Or I think there was an old song that's something that makes you go, You notice this spike where TJ has the cursor on right now? That is where that Fed announcement happened, and then you see it just basically gave up the ghost and is drifting down in the after-hour session. So not a very good thing going on right now with these markets. I think that this is basically looking at the Fed saying, well, if you're panicking by doing a surprise 50 basis point cut, then we're panicking as well. So great, not only do we have the coronavirus, but we also have the markets freaking out a little bit more now. So expect some more downside movement here in the near future. S&P, this is the one I closed all of my S&P calls today. We are fully out of the S&P position. I had 70 calls on that one, which was nice, but we're out of it. I actually thought it would go more. You guys remember on yesterday's show, I was telling you that I thought it might rally back up to a level a little bit higher, which would probably get us towards this. I had it on the SPY, but it was just supposed to, I thought it'd go just a little bit higher than it did today. I thought it'd go to 315 on the SPY, and we did not. We barely got to 314, but enough to let me get out of it because, oh well, don't want to be holding this long position as this markets continue to tank. All right, that was your S&P down 2.81. The Russell itself was down 2.13. I'm still holding my Russell position just because they're so far out of the money. I'm not really threatened to lose anything, and I have the May call options on that one, but it also gave back a lot of its gains today. All right, now the fun stuff. We had Bitcoin, which was down 1.35% to 87.48. That doesn't make it that bad of a performer in the grand scheme of things. The noteworthy stuff starts to bring us into things like crude oil. We talked about the double bottom a couple weeks back, which was a great rally point. Thought maybe it'd be nice to even trend reversal here for this downtrend we've been in for so long. And all of a sudden, we spent a week and a half just annihilating any sort of bearish sentiment or bullish sentiment, crushing it down. Now, we had that giant bullish engulfing pattern yesterday on this bad boy. Today, you have a red day overall with the candle from where it opened, but you can see that it actually was on a gap up. So you ended up with crude oil up 0.98%, almost 1% to 47.21, which I would draw some fibs on here, but I just don't have time to do all that on the show, but I might actually start incorporating that into here, doing a little bit more technical analysis as well. All right, final one, gold. Finally, good to see gold get a little bit of a reprieve and some nice move to the upside. 1638 is where it's finished. It's actually up another $1.50 in the after-hour session, really erasing almost all of the losses from a couple days ago, which is a pretty aggressive sell-off. Again, I think it's that risk-off type of assessment here, which is typically good for gold and some of the other precious metals. You saw gold today up 2.75% to 1,638. All in all, a pretty darn good day for gold. And that is your top 7. Really, out of all of it, the biggest takeaway for me is that 10-year. I'm really interested to see how this pans out. The speed at which it's moved over the last 2-3 trading sessions has been just astounding at how fast it's gone. I don't know if that's emotionally driven. I don't know if that's more people jumping in, buying in the 10-year just to get that 1% yield in the expectations that things are going to go much lower. What we have seen in the past week has been an absolute slaughtering of the U.S. dollar. I'm sure that President Trump's going to love that. We saw him influencing and swaying the Fed to do this 50 basis point cut. But that's right. I should say that with this air of sarcasm because, as we all know, the Fed is certainly not manipulated by politicians, right? They're independent. Yeah, right. Maybe I'll bring up that dollar index here in just a second. All right. Thanks, Jason. Jason, Kevin, Damien, Catman, good to have you back. If you guys want, feel free to chat in there as much as possible. I will try my best to get to all those listener questions because, as you can see, for the meantime, I will be alone on set. Catman asks a guest, are you going to have regular guests? Yes. Right now, because this is all out of my pocket, out of my money and everything, and there is not 1 cent coming in, I really want to make the show better through graphics, through video presentation, and make it a world-class show. But like I say, I've got nothing. I got my own bank accounts to work with here. So it'll be a while before I get everything back to where I think it should be, which is why I'm asking all of you for your input, saying, hey, what would you like to see? Do you want me to do a 2-minute segment on how to do, the pre-market open? Do you want? I'm all ears as to what we can incorporate. Not saying I will do it all, but I'd like to start getting that show flow down, the design of what you guys would like, and keeping it within a 30-minute show frame. And from there, I will start to bring on guests and fill it. And now I have even greater reach as to what I can go out and interview and who I can go out and interview. So I would love to see a lot of that and participation. And welcome, Mr. Lovelace from Hattiesburg. Good to have you with us today. Is that a flag that we might be starting to drop? I haven't broken the daily drop-based drop. Kevin, on which chart? Sorry, man. So let me know which chart. Type it in there, and I'll hopefully get that answer. Okay. When we first were going to do the show was actually on Friday. Dance. one of those ones you're like, dance, monkey, dance. I'm not going to dance, that's for sure. No, I am a horrible dancer unless there's a level of intoxication around, then I'm actually pretty darn good. When we were going to do the show initially, we were going to start on Friday because Friday's setup was just incredible. It's one of those patterns I look at and I go, my goodness, this is phenomenal for a bullish move. And I wanted the show, but we couldn't get the infrastructure in place yet. I had to do a whole bunch of switching, get some stuff moved over. So we didn't get that. But while the show stream was running and I was waiting to start the show here in studio, there was a gentleman who unfortunately I don't see him here today. I hope that he will come back on because he asked me two questions in there, and it was interesting because obviously he was somebody who had never traded before. And he says, Merlin, in 4 sentences, tell me the 4 things that makes traders succeed. And I say, well, in 4 sentences, I can't do that. I mean, I could give you the high level, but I thought it might be appropriate to do that today. Now, I know some of you are Online Trading Academy graduates, have been trading for a while, but sometimes this is nice to hear and have put right back into your face so we understand what's critical and what's important. One of the things that if you guys read through some of the FTC statements is they're saying that, oh, things were misleading and we were deceptive. I totally disagree 100%. If you look at the way that we present our information, I think you would all agree that if anything, I'm threatening people saying, if you do this and you don't have these steps in place, you're probably going to lose all your money. It's one of the riskiest things that you can do. It is dangerous. You're up against very sophisticated market makers and institutions who are not worried at all about your well-being, more about lining their own pockets. So from a disclosure perspective, trading is extremely dangerous. And when I started off in the late 90s, this was rather interesting to me. And I dug deep to find this report, but I don't know where it went. It was by Bear Stearns. And I think it was 98, 99, somewhere in 2000, maybe right as I was leaving for Europe. And Bear Stearns did a report that said that 93% of traders fail in the marketplace. When I read that, I was like, you got to be kidding me. 93% of traders fail in the marketplace. So I actually built a presentation, which I toured around. I did a lot of the trade shows around the U.S., and the title of that presentation is How to Be a Part of the 7% of Traders Who Succeed. And when you look back at what causes traders to fail, you can read books by Jack Schwager, which are great because they talk about these guys' learning experiences and what they had to overcome. They're almost all the same. Everybody makes the same basic mistakes. So part of the education process that we had put in place was saying, look, it's about discipline. It's about money management. It's about risk management. Notice those 3 things. I didn't say anything about making money. It's more about protecting yourself from the downside and maybe your own inner demons than it is actually making the best trades in the world. It's making sure that the worst trades in the world don't get away from you. So I thought it might be good to go a little bit deeper into this, and I wanted to answer the gentleman's question. I wish that he was here today, but he's not on set. So I'm going to go and real quickly do this, and then I'll go to some of your listener questions. I see some questions coming in from Jerry and Suraj, and Kevin, I'll get your question as well. Yeah, Jerry said 95%, 5%. Yeah, I mean, it pretty much is right in that area. And I think all of you would agree that this is not easy. You know, anybody who tells you that this is easy obviously hasn't done it. So let me just real quickly go through these. And again, as you guys progress through today's show, TJ will be flashing up that lower third that says, if any comments, questions, suggestions, things you want us to see, go to TraderMerlin@gmail.com, and we'll get you all squared away there. I am also on other social media platforms, so I'm posting different things on Facebook, on Instagram, and we'll start to see different communities adapt out there as well, so feel free to join me on those as well. Okay, so let's talk about these 4 steps to succeed at trading. All right, I'm curious to see what you guys think. Well, you know what? Let's do that since I have time. We have a small audience out there today, and Steve, I won't be dancing, but I might be asking you questions. Just type in one of the top things that you think are critical to succeed at trading. If you had to go back, I know some of you rather well, some of you send me some of your trades. Let me know, what do you think it is probably the most important thing to you to succeed at trading? Is it having the best winning trades? Is it having the grand slam? Is it precision planning? What is it? Type it in chat just so I can get some activity on behalf of all of us today. I will start off, though, with number 1. Number 1 for me starts in progression. Okay, so the 4 steps to succeed at trading starts off with step number 1, which is going to be get educated. Now, I took a nice picture of Brandon Wendell, who's one of my favorite guys out there. He does a lot of educating. He's a phenomenal educator as well. Great trader. I've known him since the late 90s in Irvine, California, an all-around good guy. A little bit crazy sometimes, but we're all a little bit crazy. I put get educated, and that doesn't mean that you have to take classes, but get out there and find out the facts about the asset classes that you are trading. Do not fall victim to the typical one, which is, oh, I'm just going to go into some Yahoo chat room and follow some fool's advice and lose a ton of money. I'm not going to go on CNBC and follow this so-called guru out there and make a ton of money that way. You need to know how these markets truly work and understand that there is a process to each asset class. Whether you're trading Forex, as I know many of you in the room are Forex traders, whether you are commodities trader, futures, equities, doesn't matter. You've all got to have it. So awesome. You guys are pretty good in the rules here. Jason Jones says meditate. That's the 4 steps to success. I'll call it a pre-step. Okay, we'll have the precepts out there, Jason. So number 1 for me is get educated. Understand the turf that you're playing. It's like, it's kind of funny. I play in a Wednesday night softball league with some Online Trading Academy employees. One of the highlights of the week. We love it, have a great time. And everyone's welcome to join and play. Well, I played baseball when I was a kid, so I know the rules. And we had an individual, we will leave her name out of it because it's a co-ed softball team. And she's on first base, and somebody hits a base hit, so she runs into second. And she continues to run through second base into center field. And the entire team is screaming at her. The other opposing players are like, what is this lady doing? What is going on? And they're laughing, and some are yelling at her like, get back to the bag, get back. She just had no idea. That's the same basic analogy. In that softball example, that was an easy out. It was no brainer. They got her out like that. It was quick and easy. Why? Because she just didn't understand the rules. Well, if you don't know the rules about execution, if you don't know the rules about order routing, money management rules, even your strategy rules, you're not going to do very well in this. So make sure you understand the asset classes. I went long-winded on that one. So, and I'm going to read all of yours at the end here. That's actually, you guys have some really good stuff to put in here, which we might even add. And I think a lot of it ties into what we're talking about. Number 2, have a strategy. All right, so I could obviously go back and say that Online Trading Academy's core strategy is what you should learn, but honestly, you just need to have a strategy. If your strategy is tea leaves, great. If your strategy is reading the star constellations, I think that's ridiculous, but you know what? If you can prove that you're making money at it, then that's fine. But it's important to have that strategy in place and know exactly what you do and when you do it and why you do it. Now, for the viewers out there that are watching this right now, I'm sure many of you have been in that situation when you started off, hopefully not now, where you're in a situation, you go, I don't know what to do right now. That should never happen. It shouldn't if you're an experienced trader, because you go, okay, well, it's pretty binary. If action A happens, then I perform this action B. If action B happens, I'll perform this action A. It's a very simple linear path to understanding exactly what we have to do. Now, let me give you a different example here. When I was teaching over in Italy, I had this idea, and one day I still would like to do it. I just want to make sure I get some funding, and I'd like it to be from an educational firm out there, an education research firm. And while I am an absolute firm believer, 100% in core strategy, I believe that gives you a competitive edge. However, what if we weren't? What if we didn't know a darn thing about the markets and you wanted to flip a coin, right? You could make the argument that flipping a coin would be a 50-50 chance, because you go long or you go short. So heads I go long, tails I go short. So here's what I wanted to do. I wanted to pick a stock, any symbol, I don't care what it is, and I wanted to flip a coin. When I flip that coin and it's heads, when I flip that coin and it's heads, I go long. When I flip that coin and it's tails, I go short, whatever that position is. So let's say we threw a dart, we picked Apple. Okay, great. We flip a coin, it's heads. Great, I'm going long Apple. So now the question is, what were my basic rules? If my basic rules were when I go long, I'm going to be trading 100 shares of something, I have to define a context. And that context would, let's say this, and I'm making this as simple as possible for everybody to relate to. If Apple and the markets are in an uptrend, and I flip the coin to go long, I'm going to trade 100 shares because I'm going with the trend. The odds are already in my favor. Even though I flipped the coin for the decision, I want to make sure that one factor going long is the trend is moving up, okay? If I had Apple and I had the markets in an uptrend and I flip tails, the odds are against me of going short Apple right now because the market and Apple are moving up. So what would I do? I'd probably trade half the amount of shares I normally would. So right there, I'm already taking what quote unquote an odds enhancer, and that's one of the things I love about what Online Trading Academy has done is the odds enhancers are simply that, saying these are factors that will simply put the odds in your favor. And if you do that, you could potentially just flip a coin going, I don't know whether I'm going to go long or short. All right, well, I'm going to go short. Great, let's run through some pieces. Is that not a strategy? I'm willing to bet you over the course of time that strategy would do rather well. especially if you're in trending markets. It's choppy markets where that strategy probably would not do that well. But hopefully some of you guys get that a little bit, right? It is important to have a strategy in place. To me, the more descriptive that strategy is and the clearer it is to you, the better the results are going to be for your accounts and your positions. So, number one, get educated. Number two, have a strategy. I'm a core strategy. It's in my trading plan, but it might be some other strategy that you got out of a book or some seminar. That's okay, because step number three is the most important part of this, which is make sure that you have a plan in place. So, you've got your strategy, and it's reading tea leaves, right? Or you're looking at, I like the star constellation ones better. I kid you not, there was actually a guy, I read about this one, it just made me shake my head, but I understand why. His trading selection was off the migration patterns of elephants. I kid you not, you can Google this thing and find it out there. He made trades off the migration patterns of elephants. How that has any relationship, I have no friggin' clue. But he was making money. And I bet you it has to do with the risk management side of it. So when we talk about plan, you guys have heard me pound this table many, many times on the old Power Trading Radio Show and in any class I've ever taught or any class you've ever taken with Online Trading Academy. There's two types of plans here. Number one is the plan for each trade. That plan goes into your strategy. How are you applying your strategy to that specific trade setup? Where's your entry, your stop loss, your price target for that specific trade? Those are the key factors. Understanding the risks of that security, etc. The second portion of this, hello Frankie Shops, welcome back. The second portion of the plan to me is probably the most important part of this. So again, I think the guy's name was Jason who asked me the 4 steps to succeeding at trading. I think that this is probably the most important part of it, is the business plan aspect. I know a lot of people don't like to say the word, well, trading is a business. I think you should treat it like a business. It is a business where you carry inventory. You're responsible for all facets of the business. So why not treat it like a business? Therefore, for me, it's about having this trading plan in place. And that trading plan should incorporate all of the different rules that you have to follow. And I'll give you a simple example of that. In my day trading plan, when I look at my day trading plan, it says I cannot lose more than $500 per day when I day trade. That's a simple rule, right? I know for some people it might be a lot more than that. For some people it might be a lot less. Doesn't matter to me, but you have to have your rule. And why do you think I put that rule in place? I've told you guys many times that for me, if I'm day trading and I lose $500, it's not the end of the world. Okay, I'm not going to be distraught about it. Most people around the office won't ever know if I lost $500. But I can assure you when I lose $5,000, they know it. Don't come near me. I'm a jerk. I am a complete pain in the ass. Leave me the F alone, right? It's that type of attitude. So the $500 mark for me is that point where I know it's not going to damage my psychology. It's not going to set me over the edge and I start revenge trading and do stupid things. It's also an amount of money that's not going to break the bank. You all should have that, right? That should be in your plan. And it should be how much you're willing to lose per day, per week, per month, per year. Also, establish your goals, the things you're trying to achieve. And yes, I know you want to make money, but it's not just about money. There are things in life that you want to achieve. And my trading plan, I have in there, my goal is to take a 2-week vacation to someplace I've never been to before. Well, given the demands of work, 2 weeks sometimes get rather challenging, and I had a fear of flying for 2 years, which is really odd. I don't know how that came. I beat it, but that was my trading plan. It was I want to experience new things every year, and I still do that every year as part of my trading plan. So you want to have that business side of it, and you want to have the actual individual trade setup side of it. And that business plan side of it should map out everything. It should be your personal Bible to succeeding or potentially failing in the financial markets. So as we look through the 4 steps to succeed at trading, we start off with an education. Understand what it is that you want to trade. If it's options, great, learn it. If it's futures, great, learn it. Forex, great, learn it. But get in there and understand that not all the instruments, not all these assets are the same. They're going to act differently. Number 2 is make sure you have a strategy, rules that you follow, and what specifically are those rules. Last night, if you follow me on Twitter, and I would encourage all of you guys to follow me on Twitter or Instagram, and they're all going to be TraderMerlin is the handle. Please feel free to share those. I will start doing more calls. Last night was United Airlines. And United Airlines, I'm going to put this down here because I want to end with that one, UAL. I had UAL as a great buy today. Oh my goodness, the chart. We saw it, talked about it in the show yesterday. We ended the show looking at that and went, man, I'm going to keep an eye on this one. Based off the strategy, rules that I have, I would not have made a trade. And I know some of you are going to look at the chart here in a minute and go, well, it would have been a loser. That's why you didn't make the trade. No, that's not why. It was actually great. If you look at the Twitter feed, somebody even explained the rules. Mr. Lovelace, who's in here today, said, hey, it opened above that price, so it's a no trade, right? I said, correct. You're absolutely right. Follow the rules. The final piece of this is making sure that you review those results. It's one thing to have a strategy. It's another to have a plan. But if that strategy doesn't work and the plan doesn't work, then where are you going to be? Broke. You're going to be bankrupt and one of those people that complains that it didn't work for you. They're not going to work for everybody. You need to modify it. And how do you do that? You look at your results. What did I do wrong? What could I have done better? You know, if you got caught today holding that if you took a big loss today because you were short right as that Fed came out and announced a 50 basis point cut, that's not your fault. There was nothing you could have done about that. You got smoked in a 5-minute window because of an outside event. Those are, we'll call those the miniature black swans. What you can affect are when a normal market trading day, you took too big of a stop loss, you're trading too many shares, maybe your stops were too tight. It's how did you analyze those securities? How did you analyze those setups? And the more you do that, the more likely you're going to be able to modify and tweak to fix those mistakes. And when you fix those mistakes, then you start to become more profitable, more successful, and most importantly, more consistent. So I believe it was Jason was the gentleman who asked me for the 4 steps to succeed at trading. He said, only 4 sentences. Get educated, have a strategy, have a plan, review your results. Now, because you guys participated a lot, and I love it, thank you guys so much for that one. No, welcome back, brother. I'm sorry, Frankie. Welcome back, brother. Good to have you. I'm busy over here. Can't you tell? We're doing things a little bit differently, Frankie, so cut me some slack, brother. I'm going to read through some of these because I think they're great. Gary says strategy is key. Absolutely. And of course, we have our viewpoints on which strategy that should be, but you got to make your own decision on which strategy you want to use. And it might be a hybrid of core strategy with something else. That's great as well. Catman says don't over leverage. Hallelujah, don't over leverage. Leverage is using borrowed money, and it sounds great. I'll tell you the number of people that come through the doors going, well, I have $1,000, now I can trade $100,000 worth of Forex. Yeah, it's 100 to 1 leverage. You really want to do that? That means you could lose money 100 times as fast. But I could make money 100 times as fast. But if you're just starting, you're probably going to lose if you just started out because you're gonna fall on your face a few times. That's okay. Do it with small share size. So leverage is a killer. Now, that said, Catman, once you get to that point of you understand it, let me rephrase that. Once you get to the point where you trust yourself implicitly to pull the trigger and make the decisions when you're going to make those decisions, then you can start using more leverage. Because what I've seen happen is people use way too much leverage and they're still not disciplined enough to pull the trigger when they should have pulled the damn trigger. So all of a sudden that market is facing them with a huge loss and they go, oh, just another 2 ticks. Another 2 ticks, I'll let it go. Oh, it hits that 2. Oh, another 5 ticks. And you keep making excuses. Next thing you know, your account is blown, you're bankrupt, and you go complain to a regulatory agency. That's your fault. That's on you. Rules should have been in place for you to stop that from happening. So yeah, leverage is dangerous. It can be great once you know how to handle it. Catman, don't have a leverage. Jason says meditate. I don't meditate, but that could be in the pre-steps. I think exercise, honestly, should be one of the pre-steps. Get your blood flowing, get your body all loose and ready to go. James Lovelace says risk management. Jim Kelly says emotional IQ, trade plan, and risk management. Yes, all of those. Risk management. Livia says one which is interesting, which is emotions in check. I didn't put that one on here, but I would put that in your plan, your personal business plan. And here's how I would change that. In the book that I'm writing, been writing for 15 years now, which now that I'm doing this on my own, I may have to actually finish this book and sell it to you guys, so I'd love it if you bought it. But I outlined a story from from a guy on the trading floor. And he was really, really emotionally volatile. Like his anger days, you just go, I'm leaving the building. This guy's a freaking maniac. When he was in those bad moods, he would lose thousands of dollars. When he was in a good mood and on point, he would kill it in a good way, make $10,000 a day. But what we found out was every time he fought with his girlfriend, he had 5-figure losing days. And finally, we would come into the office, he'd be like, hey, you fighting with your girl? Oh man, I can't believe she did. Just go home. Just go home. We'll meet up later, go have a beer somewhere. And he finally listened to us. But simple things like that. Emotions have to be in check. Emotions will tear you apart. If you are distraught, if you got in an accident, if you're got a fender bender, you're having family problems, don't trade. Let that stuff go away or regroup your head so it doesn't become a factor and get in your way. So that's a great one, Livia. Siraj says discipline. Absolutely. Damien knows me well. Always use a stop. So says Catman. Damien says follow the rules. So good. You guys got a lot of stuff there. Let's see. Locked my first mortgage ever at 3.5 today. Nice. I'm hoping that's for the 30 because I know you can get a 15 right now at really low rates. But yeah, it's hard to believe that a 30-year fixed could get 3.5. I think they actually were trading at 3.2 or 3.1 earlier in the day. It's been absolutely nuts out there. All right, Anthony, another good one. He says, don't be greedy. Greed makes you do stupid things. Yes, in the immortal words of Gordon Gekko, greed is right. Greed is good. Greed works. Hey, look where it got him. Yeah, I don't think so. Don't be greedy out there, guys. All right, last piece here as I got through those. So again, thank you, Jason, for sending in that 4 steps to succeeding in the financial markets. I want to just show you real quickly UAL. I will probably be doing a lot more of this as we progress on Power Trading Radio. I need to figure out, again, how I can potentially monetize this and maybe make myself a couple dollars in the process because, you know, we've got to just, not everything to be for free. But let me go here and check out UAL. This is on Clik we're using right now. And I'm going to be using a wide variety of platforms. If you guys have a specific platform you want me to use, I'm happy to try different things and do different visualizations. Here's the issue. Here's United Airlines, and we'll wrap it up with this one. You see this candle right here where TJ has his cursor on. It's called a Dragonfly Doji. It's one of those ones that, you know, I always do my Gollum impersonations where I feel like I'm rubbing my hands going, my precious. So I put a line above there. And it's a little tight right there, but I'm going to just put it right above there. So what I'm basically saying is I'm not going to make any trade until it breaks above this blue line or magenta line, whatever that is. So I'm going to put this on a 15-minute time frame so you guys can see what happened. All right. Of course, it'll show today's trading, but I'm going to move it back so we don't see any of that. And let TJ get rid of the 24-hour session, just to have a little more fun. Okay, get rid of the after our session breaks so we can go just regular normal. There we go. Okay. Boom. Now we should be back to regular market hours. So forget today's activity. That's where it looks. Okay, so basically what I'm saying is on this next day, this is the close of the day. The next day, it has to open below. It has to open below here and then rally up to break through it from above. It didn't. Notice it started above it and then just continued to drift down. So this is a no trade, even though the setup looked great. That goes back to point number 2 where we mentioned have a strategy. Have those rules in place so you understand what it is that you should be doing so that you don't get caught off guard and make bad decisions out there. All right. I'm already way past my showtime, TJ. Oh, my goodness. We're going long already. TJ, don't let me form the addiction of going long. This show's supposed to be 30 minutes. He's already shaking his head at me, I tell you. All right, cool. So let's wrap up. Obviously, today's big thing was the 50 basis point cut out there in the marketplace and the lack of response from the market. I think that was really noteworthy is how the market's plummeted from there. I have a feeling you'll probably see that continue as the market's now going, uh-oh, not only is the Fed super concerned about the economy, which they shouldn't be because Powell said the economy's fine, but now we have more issues about coronavirus, which it's amazing that Mr. Powell had the gall to continue to say he thinks it's going to get worse because Mr. Powell is such an astute member of the disease community, right? He knows so much about this industry, but whatever. And the other part was looking at the 4 things that makes traders succeed. And I wouldn't say makes traders succeed. I would say assists or helps them succeed. As you all know, there's a tough battle out there in the world of trading, lots of stuff to deal with, lots of stuff to contend with. For me, one of the major things has been having a support group, a community around you. Hopefully, I can help be part of that community here for you guys as well. Again, if you have changes, suggestions, things you would like me to cover, I don't have a Power Blast button right now. And again, I don't have the money immediately to set up my website, which will be TraderMerlin.com. You can email me. It's TraderMerlin@gmail.com. Send in your comments, suggestions, things you'd like us to see. Again, a big shout out to all of you who sent in messages last night, even though it was our first show. I got a lot of messages from you, and I'm trying to respond to everybody that sent in messages, but I do want to make this show for you guys and make it better so that you will share it every day. Go out there with your family and friends and say, hey, check out this show. This guy kind of knows what he's talking about maybe, or I hate this guy so much, you got to check him out. I'll be your Howard Stern. But share it out there. I need to help get this thing bigger and better and more exposure. If you like the show, click that link or click the thumbs up button on your Facebook or on your YouTube pages. And again, give me some feedback. Thank you guys so much for joining us today. I will see you tomorrow for our Hump Day Trader Merlin show. Take care.